Welcome guys, this is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe, turn on the notification bell to get notified when we upload our weekly content. Okay, so this is going to be the, if I'm not mistaken, the 5th episode on the smart money concepts 3D model. Okay, I think it should be the 5th or 6th episode. Okay, there has been a little delay on the series because of the fact that some of us have been complaining on the audio quality on the content. Okay, so we have have uh really been trying to work on the audio. Okay, and I hope we have a little bit improvement on it. Okay, so please, if the audio has improved more than before, kindly let me know in the comment section. Okay, kindly leave a comment or to know about the improvements on the audio segment. Okay, so with that being said, let's get down to today's business. In today's teaching, we're going to be looking at institutional sponsorship and how to identify it in setups. Okay, so we are looking at it in setups. All right, so with that being said, let's get down to today's business. Okay, now when we say institutional sponsorship, how to identify it in setups. Okay, so we are going to be looking at it at from two perspectives in terms of institutional sponsorship in long or buy setups, then institutional sponsorship in short setups. Okay, so now for us to identify institutional sponsorship, there are going to be four major things that we look in price. Okay, we look to see in price. Okay, so in terms of for long setups, there's going to be a form of higher time frame price displacement. Okay, it might be in form of reversals, expansion, or return to fair value. Okay, then an intermediate term imbalance in price, which is a move to discounts. Okay, or sell side liquidity run. Okay, in this case, we are looking at for long setups. Okay, so an intermediate term imbalance in price should be a kind of a run on sell side liquidity. Okay, so it should be seen on the higher time frame. Then the next concept we are looking at is short term buy liquidity above the market. Okay, this is an idea for pairing long exits to sell to. Okay, so that is stops as we know it. Okay, sell stops as we know it. So now, and at the same time, we are going to put into consideration the time of day influence. Okay, so now for short setups, same thing goes for short setups. There are going to be some sort of higher time frame price displacement. It could be in the form of reversals, expansion, or return to fair value. Okay, which is fair valuation. Then the next thing we ought to see in price action is an intermediate term imbalance in price. Okay, a move to premium or buy side liquidity run. Then the third thing should be a short-term sell liquidity below the market, which is an idea for pairing short exits to buy from. Okay, so then at the same time, the last but not the least, the time of day influence. Okay, so now we are going to look at institutional sponsorship and what it means. Okay, so now institutional sponsorship is the willingness to protect an underlying price swing that has an high probability on unfolding. Okay, so the impact of large institution, bank, and large equity traders coming in to fund the side of the market place that you are anticipating seeing it run to a particular price level. All right, so what we mean by institutional sponsorship are, like we can see it here by the definition, that is the willingness of the smart money, which is the large institutional bank, the willingness to protect an underlying price swing. Okay, so in this example we have a daily chart right here. Okay, so the daily chart shows price dropping down below an old low, okay, where sell stops would typically be pulled. All right, so we had this old low right here and we had this daily time frame dropping down into it. Okay, so now what's going to happen here is that the aggressive trader can at that time look for lower time frames to show similar price action in the form of a low being violated and a long can be taken. Okay, so when this happen, aggressive traders can then go to the lower time frame on this particular uh, price action, okay, on this particular daily candle, and look for similar price actions, which is, in other words, you have to, price is being fractal in nature, right? So you have to look for a similar action that happened on this higher time frame, right, and to occur on the lower time frame, so that in that way you can, to get a long setup. Okay, to get a long setup. Now, going down further from here, what to expect on when expecting higher prices, in other words, where is price likely to reach for next. Okay, so now in this example, as you can see, we had this old low being violated right here and the buy stops have already been, paid for to go long. Okay, so we are anticipating long position, we are looking for a long entry from this level. Okay, so now what is the near, where is price likely to trade to next? Okay, so I want you to ask yourself this question: where is price likely to trade to next from down here? Okay, after acquiring, the pool of liquidity, absorbing the pool of liquidity resting below this old low, where is price likely to trade to next? Okay, so the most likely the most level that price is probably going to be reaching for is, sell side liquidity, right? And that is going to be in form of sell stops resting above this old high. Sorry, we had this old high and this, then we have this liquidity void, okay, which is an imbalance, right? So the probability of price to reach for the uh what is it called, to look to reach for the buy side liquidity resting above here is very, very high, because smart money are going to acquire long they're going to acquire long positions right here, and the best place to offload these longs is going to be above the old highs, right, which is going to be a form of buy stops resting above these old highs. Now, remember we talked about, now when we have price action like this, we are anticipating some sensitivity and protection of not seeing the price go lower. Okay, then we are going to see some characteristics of institutional sponsorships. That means the bank are coming in, okay, and they are capitalizing that old low. That means they are buying it again. All right, so now, so this right here is a low risk and high probability setup. In this case, we have having this old low right here being violated right here. Okay, now when price traded above this daily candle bias, okay, when it trade above this daily candles high, okay, this old high right here, and broke structure to the upside, this is going to be an order block. Okay, this is an order block being created right here, and smart money is going to buy this. Okay, they're going to place more buy long positions right here. Okay, and the most the level they are going to be looking at to offload their long position is going to be above this old high, which is buy side liquidity, and at the same time we have this imbalance right here. Okay, so now this right here is a kind of a low risk high probability setups. Okay, so now going down further, and I have some little notes as you can see here. Okay, what was the first thing we talked about in the characteristics of looking for institutional sponsorship? Okay, we have to see, the first thing we outlined was displacement on the higher time frame, right? So this is the displacement, right? We have displacement, higher time frame displacement. There's a clear evidence of large entity entering the marketplace, because the daily charts are not going to move that dynamic without sponsorship behind by banks or large money institution. Okay, so now smart money obviously bought into this bullish order block, right? This bullish, the last down candle before this up move, right? So smart money of your are actively trading. Okay, this is a proof that smart money are actively trading, because guys, this is the daily time frame, right? And it's going to take lots and lots of of orders to move the market, this to move price in this, in this kind of, to create this kind of huge displacement. Okay, so this is a clear evidence of large entity entering the marketplace. Now the reason why we are focusing on the daily time frame is because that's where the banks are trading off from. Okay, those levels are key to the institutional traders. Okay, so the banks are actually looking at the higher time frame, which is a form of the daily, the weekly, and the monthly. Okay, so that's one of the importance of or rather the reason why we focus mostly on the daily time frame. Okay, so now we have the sell side liquidity, as you can see, and smart money paid their long orders, their long setups with the with those that were willing to go short. Okay, those traders that saw this as a breakout and probably, they place their set stops resting below here, smart money is going to pair that orders as their counterpart to their long entries, right? And as you can see, they bought the bullish order block, they bought at this last down candle before this up move, they placed more positions, they added more positions to it. Okay, and thereby creating this higher time frame displacement. Okay, so now when we see this kind of price action, then we have to go back to the beginning of the price swings. Okay, in other words, when we see this kind of, displacement, we go back to the roots, and that would be this swing low, because this is the swing low that broke this old high. Okay, that broke this short term high rather to the upside. So this is the swing low that broke structure to the upside. Okay, so we go back, we make reference to the swing low. Okay, so in other words, we make reference to the roots, to the beginning of the price leg. Okay, now we are going to anticipate, once we make reference to the, to the root of it, we are going to anticipate some retracement, right? We're going to anticipate some retracement, some moved back into the fair value, into fair valuation. We're going to anticipate some move back into the discount side of it. Okay, we're going to anticipate some move back into the discount. Okay, so now to identify institutional sponsorship in a particular segment of price action, you need to see immediate dynamic response. Okay, if it is not willing to move right away, that means there is no institutional orders in that area. So therefore, if you are entry and see that lackluster activity, the first thing you should be thinking is either to reduce risk or just completely bail on the trade. Okay, you can always re-enter on another time. All right, so now when we see this kind of move back to discount, okay, the price should not hang around much on this particular area. Okay, on this bullish order block, price should not hang around much. Okay, we should see some kind of immediate feedback, immediate reaction from this price, from this level right here. So that is another way of identifying smart money institutional sponsorship. Okay, the first one we talked about was displacement, right? Then the second one is the need of seeing immediate dynamic response. Okay, once price trades back to, some level of discount. In this example, we have, it could be premium. Okay, it could be premium in this case, but in our example, we're having a discount scenario. Okay, now we have one and number two of the criteria when we are looking for institutional sponsorship. Okay, we have higher time frame displacement, which is this. Then we have price trading back down into the discount, closing in and basically returning to the fair value of an old area where it was bought up the last time. Okay, which is this move. Okay, so this is price returning to fair valuation, right? Trading back to this OB right here. Okay, so this is price returning back to a discount, trading back down into the discount. Okay, and closing in this range, right? Closing it in this particular range. Okay, and trading back into an area where it was bought up last time. Okay, now where would be the most logic area for smart money to offload their long positions at? Okay, in other words, where is the next level of liquidity that price is likely going to reach for? Okay, so now I want you to look take a look at this price action data and tell me the next possible price level that smart money is going to offload their long positions at. Okay, so and of course, if you have been following us, you should know the answer to that. If you have been taking note and studying price action, you should know the answer to that. That the obvious area that smart money are going to offload their long positions that they are going to acquire below here is going to be above this short-term high, probably above here and above this old high. Okay, so we are going to come to that in a short time. Okay, in a short moment we are going to come back to this. Now the most probable the high probability level that smart money are going to offload their long positions is going to be above this old high right here, this short-term high, and probably this short-term high. Okay, so now we have buy side liquidity obviously resting above here. Then we have buy side liquidity obviously resting above here and above here. Okay, so now looking at this, you can see price has already reached for it. Okay, price has already reached for it. Now we have to do a little bit of a thinking right here. Okay, now think for a moment. We have a daily chart where stops were run out. We had an old low that created a displacement. Okay, we had this old low that created this displacement, right? Then we have price return to a fair valuation. Okay, we have a daily chart here where stops were run out and price was willing to go higher. Okay, which is obviously in this area. Okay, then price came back down to that the same area and they bought it up, which is fair valuation. Okay, we have price being bought up right here. Okay, price was bought up right here. In other words, price was first accumulated down here, created a displacement, returned to fair valuation, they bought it again or down here. Okay, price created another displacement, came back the third time and they bought more positions right here. Okay, so now this is where it gets tricky. Price has already run an area of buy stop liquidity and broke structure to the upside, thereby shifting the structure. We are now currently bullish. Okay, so probably you are thinking that the next area that price is going to come back to is uh going to come back to this area right here, this other block again, to be bought up. Okay, so now that is where institutional sponsorship is going to come in. Okay, so now looking at this, we have already attacked the sell stops resting above this old high, right? So now where is the next probable the next level of liquidity that price is going to reach for? Is probably above this old high, and the next, this old high is going to be our possible next draw on liquidity. Okay, this old high right here. So now if price is going to reach for this old high, the probability if price is going to reach for that old high, which is this, it is going to be unlikely for it to come back down to this particular level. Okay, it's going to be unlikely for it to trade back down into this particular level. This is because institutional sponsorship should protect price from ever coming back down into this price level. Okay, so institutional sponsorship are going to protect price from retracing back down to this old level, because they have already they accumulated some long position right here, came back to it, accumulated more, came back to it, and they accumulated some more right here. Okay, so it is going to be unlikely for it to trade back down into this area right here. Okay, institutional sponsorship are going to prevent price from retracing that deep into this area. Okay, so we're going to look at that in the next slide. Okay, so now we talked about when we have a displacement and making reference back to the origin. Okay, so in other words, if smart money accumulated here, this will be our origin, right? So now let's grade this price swing. That is going to look like in form of, we have the origin, the low, this is going to be our midpoint, which is equilibrium, and the overall target is going to be our premium level. Okay, remember, we buy at discount and we sell at premium, right? So if price is going to reach for this old high right here, if smart money went long right here, they are not going to sell short. The price range from this as the origin, this being the midpoint, which is equilibrium, and our overall target as a premium. Smart money are not going to let price trade back down here because they have already accumulated enough positions, enough long entries, they have already accumulated enough long entries, and the need to protect their position is going to be, and there's going to be need to protect their long positions. Okay, they accumulated down here, they accumulated some more, they accumulated uh another position right here. Okay, so then there is likely no need for price trading back down because institutional sponsorship is going to protect their positions that they are having down here. Okay, their long position, institutional sponsorship is going to protect it. Okay, so price trading back into the mean threshold of this other block. Okay, so this is another block when we add this break of structure to the upside. Okay, so price is going to, as you can see, price retraced back down into this is the mean threshold of the other block. In other words, this is the midpoint of it. Okay, measuring these single candles, we will have this as the midpoint. Okay, we'll talk about that when we get to the PD array matrix, right? So now, which smart money are using to protect price from retracing deeper to the point of origin? Okay, I don't know if I've made mention of this earlier. When we have an order flow that is bullish, okay, each down candle are going to protect price. They are going to act as support to price. Okay, they are going to act as support as price expands higher. Okay, each down candle are going to be acting as a form of support to price in a bullish order flow. Okay, in a bullish trend, while in a bearish trend, the up close candles are going to act as resistance to price. Okay, they are going to act as order blocks. Okay, so now if this is our origin right here, this is going to be our midpoint, and our overall target is going to be the premium level at which smart money are going to offload their long positions at. Okay, so and as you can see, we had price moved swiftly to that, even though we had this quick sweep downwards. Okay, even though we have this quick move down, which is obviously manipulation, price did in fact reached for the overall target. Okay, so now what are the takeaway from this? The takeaway from this is that institutional sponsorship are going to, protect their positions. There are going to be times they are going to protect their positions because as we can see here, your thoughts would actually have been that after price return to this to this OB, okay, to this OB, it was, you might have, be likely be thinking that it's going to come back to this area. Okay, so there are going to be times that institutions are going to, protect their positions, and in in and it's going to come by some way of, uh how am I going to put it? This is more like how to identify when smart money are actively trading. Okay, how to identify institutional sponsorship, if they are currently sponsoring the market in the marketplace right now. They are currently sponsoring price and the movement. Okay, so these are one of the few ways we know. Okay, so and we have outlined them right here. Okay, there are going to be some sort of higher time frame displacement, which would be in form of reversals, expansion, or return to fair valuation. Okay, which is what we see here. Okay, so this is of course a displacement, right? This is displacement, return to fair valuation. Okay, they accumulated some more, created another form of displacement. Okay, and price of course return to fair valuation. Okay, some move into a discount level, and you can just see how it played out. Okay, so this is just all for today's video. I know this is not really much, and I just felt like including it on the series of the smart money concept. Okay, so I do hope you have learned one or two things from this. Okay, the next series is going to come up right after this episode, and please, if this is your first time of coming across this channel, please do well to subscribe, turn on the notification bell to get notified when we upload our weekly content. Okay, so see you guys in the next video, and have a good trading week.